Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Inflation holds steady at 1.7% in October, giving the BSP more room to ease. The central bank, on an easing cycle since August, may cut rates again in December. Office vacancy in Metro Manila stays high as new supply outpaces demand. First, let's take a look at how global financial markets performed overnight. U.S. stocks rebounded overnight as worries over inflated tech valuations eased, restoring some confidence after a week of volatility. Wall Street closed higher, lifted by upbeat earnings and stronger than expected economic data that revived risk appetite.
NASDAQ bouncing back nicely after the big tech sell-off to start the week, but we couldn't really find much of a catalyst for the sell-off outside of some valuation concerns. So it's possible, I think, that the takeaway is just that a higher level of volatility should be expected. You know, we're in now year 4 of this bull market. There's uncertainties and headwinds, but there's also tailwinds. So I think the takeaway is, you know, you're never going to get a sustained sell-off that's just valuations without some other catalyst.
The Dow Jones Industrial Average higher by 0.5%, the S&P 500 higher by 0.4%, and the Nasdaq up by 0.7%. Over in Europe, markets also ended higher. The UK's FTSE 100 up by 0.6%, Germany's DAX up by 0.4%, and France's CAC 40 higher by 0.1%. Here at home, the road may be opening for another rate cut. The Bangko Sentral ng Pilipinas may reduce its policy rate in December as softer inflation and clearer rice import rules give it more room to support growth. Soft inflation and a stabilizing food supply are giving the BSP space to ease policy and bolster market liquidity. Inflation held steady at 1.7% in October, below last year's 2.3%, and within the BSP's forecast range. The central bank expects inflation to average below the low end of its target next year, driven mainly by falling rice prices. Domestic growth, however, continues to slow, reflecting weaker business confidence, tighter public spending, and global uncertainty. Rice, meat, and dairy prices have eased, offsetting higher electricity costs. Analysts say these conditions give the BSP room to cut rates to help cushion the economy and revive private sector sentiment amid a slowdown in government spending. Now, as the central bank looks to support growth, the broader economy is showing some signs of resilience. The Philippines is holding up better than many of its Southeast Asian peers amid global trade tensions, thanks to its service-driven economy and stable domestic demand. Bangko Sentral economists attribute this resilience to strong remittances from Filipinos overseas and a growing base of service exports such as outsourcing and tourism. The business process outsourcing sector continues to support jobs and foreign exchange inflows, while tourism contributes a record 5.9 trillion pesos this year, about 21% of GDP. With limited trade exposure and investment-led deficits, the Philippines remains among the region's most insulated economies, though exporters still face pressure from weak global demand. For businesses, that means the domestic market, rather than global trade, will continue to drive growth heading into 2026. Now, from trade headwinds to price pressures, the latest data shows we have some breathing room. Inflation in the Philippines held steady at 1.7% in October, staying within target and extending price relief for consumers and businesses. The Philippine Statistics Authority says falling rice prices, along with slower increases in meat and dairy, helped offset higher electricity costs. Rice prices dropped 17% year-on-year, while meat and dairy also eased. Even with rising utility rates, headline inflation remained within the Bangko Sentral's forecast range of 1.4 to 2.2%. Analysts say that the subdued inflation gives the BSP more room to cut interest rates, possibly as early as December. Now, again in December rather. The central bank, however, warns that electricity adjustments, rice import tariffs, and weather disruptions could still add pressure in the months ahead. For businesses, stable prices mean temporary relief on costs, but monitoring energy and food supply risks will remain crucial as policy easing continues. And with inflation holding steady, price pressures continue to ease, giving both consumers and businesses some breathing room amid a weak spending cycle. Economists say weather-driven price hikes are expected to be mild and temporary, with inflation still well anchored. Price increases slowed across major categories, including food and non-alcoholic beverages, and tobacco, health, transport, as well as recreation, sport, and culture. Reyes Tacandong and Company Senior Advisor Jonas Ravelas describes the economy as being in a sweet spot with stable prices but muted consumer spending. DLSU economist Ella Oplas adds that consumers remain guarded this birth season, delaying purchases until bonuses come in, reflecting lingering economic uncertainty. The government, meanwhile, says it is confident of maintaining price stability through 2025 and beyond, supported by improved food supply and targeted import policies. For businesses, that means a window of stability, even as demand remains subdued and recovery still hinges on stronger holiday spending. Now, in the wake of the recent calamities, President Marcos Jr. is calling on government agencies to lead with humility, a modest Christmas that puts recovery and unity first. The president, together with Budget Secretary Amenah Pangandaman, is reminding all officials to keep Christmas and year-end celebrations simple, in consideration of Filipinos still recovering from the recent disasters. The Office of Civil Defense reported more than 60 deaths and over 20 people still missing after Typhoon Tino swept through Cebu. Residents recounted raging floods that destroyed homes, livelihoods, and personal belongings. As of Wednesday, the storm has moved westward over the South China Sea and is now heading toward Vietnam. The call for simple holiday gatherings is part of the administration's Bagong Pilipinas vision, highlighting inclusivity, empathy, and responsible governance. Presidential spokesperson Claire Castro announced that the DBM has released 63.69 billion pesos for year-end bonuses and 9.24 billion pesos for the 5,000 peso cash gift to be distributed to over 1.85 million government workers nationwide.
Ang Department of Health, o DOH, sa pangunguna ni Secretary Ted Herbosa ay agad na namahagi ng mga gamot at malinis na inuming tubig, hygiene kits at water containers sa Cebu, Aklan at Eastern Visayas na lubhang tinamaan ng bagyo. Ang Department of Social Welfare and Development o DSWD naman, sa pangunguna ni Secretary Rex Gatchalian ay namahagi ng mga family food packs at ready-to-eat food items sa mga sinalanta ng bagyo. Pinapunta na rin ng Pangulo ang ilang miyembro ng kabinete upang mamonitor ang kalagayan ng mga residenteng tinamaan ng bagyo.
The administration says it wants this year's celebrations to reflect unity and austerity rather than excess as communities continue to rebuild from Typhoon Tino's aftermath. Now, France remains upbeat about investing in the Philippines despite corruption concerns, underscoring the need for stronger safeguards and greater transparency in public projects. At the 11th Philippines-France Joint Economic Committee meeting, DTI Undersecretary Alan Gepti said bilateral trade remains strong, adding that corruption is a global challenge that every economy must confront through stronger institutions. France now ranks as the Philippines' 19th largest trading partner, with total trade valued at $1.54 billion. It is the 20th biggest market for Philippine exports, amounting to $404 million, and the 18th largest source of imports at $1.14 billion. The European nation continues to pursue investments across strategic sectors from aviation and infrastructure to maritime, agriculture, film, and human capital development, signaling enduring confidence in the Philippine economy. For Philippine businesses, that means new opportunities in trade and technology, provide policy reforms, deliver the transparency investors are looking for. Now, the Philippines is set to lead ASEAN in 2026, taking on the chairmanship at a time when regional unity, competitiveness, and credibility are under strain. President Marcos accepted the gavel at the ASEAN summit in Kuala Lumpur, vowing to navigate our future together with a focus on peace, prosperity, and people. Joining us live from Beijing is Ana Rosario Malindog Uy, geopolitical and economic analyst and vice president for external affairs at the Asian Century Philippines Strategic Studies Institute. She's currently pursuing her doctoral degree in economics at the Peking University, and she joins us to talk about what the ASEAN chairmanship means for the Philippines. Hi, Ana. Good morning, and thank you for joining us.
Thank you so much for inviting me, and good morning to you and to our viewers. Thank you so much.
Okay, Ana, let's talk about the significance and the timing of this chairmanship. What does this mean for the Philippines politically, economically, and strategically?
Okay, that's a very good question, I think, because, politically, if you really look at the ASEAN chairmanship of the Philippines next year in 2026, politically, it is an opportunity to reclaim regional leadership and diplomatic credibility for the Philippines. And I think if the Philippines would want to pursue that kind of line, it has to emphasize buzzwords or what you call themes like ASEAN unity, ASEAN centrality, digital transformation, climate resilience, and inclusive growth. That is this is politically speaking. And also, this is an opportunity for the Philippines as an ASEAN chair in next year to what you call project its soft power. And this means this means diplomacy in every possible way. And this is also the opportunity for the Philippines to what you call rehabilitate, or to have opportunity to have a diplomatic rehabilitation, precisely because if you really look at the Marcos Jr. administration, vis-a-vis our ASEAN counterparts and even beyond ASEAN, the way the Philippines being looked at is it's more focused when you talk about the securitization of its foreign policy. So in a way, politically speaking, next year, Manila would have the opportunity to project to the ASEAN membership and beyond that, it is not like that, hopefully. And when you talk about the economic dimension of its chairmanship next year, I think two important things that the Manila should focus on is championing first and foremost the newly signed CAFTA, or the China-ASEAN Free Trade Agreement 3.0, and also the implementation of RCEP, or the Regional Comprehensive Economic Partnership. How they gonna do that? One thing that they can do is probably focus more on greater facilitation of foreign direct investment, and I think more focus on intra-trade regional integration, inter-trade meaning within ASEAN, and of course what you call regional integration that would involve ASEAN partners like, for example, China, because we have the CAFTA.
Yeah.
So that is very
okay, Anna, I want to jump right in there. You mentioned a lot of great points, but before we get to that, as the Philippines pursues leadership in the ASEAN with this role and diplomatic credibility, can you give us some perspective? How would you describe the current reputation of the Philippines right now in the ASEAN and in the broader international community, especially given all the noise as we know it back here at home? Go ahead.
Yeah, that's a very important question, I think, because from what I know and from my conversation with ASEAN counterparts, the way the Philippines is being viewed by ASEAN member states and even beyond is that it is like an extension of Washington. It's an extension of Washington when you talk about Washington or the United States strategic interest in the Indo-Pacific region, especially that it is very much, has a conflicting relationship with China over the South China Sea. So this is actually the challenge of Manila when it assumed chairmanship in 2026, especially when you talk about security issues. The challenge actually for the Philippines is to have a balance dynamics when you talk about security. It has to navigate what you call balancing the narrative of deterrence and dialogue, and also the chairmanship should go beyond the discussion on the maritime dispute.
Yeah, this comes
it is a balancer.
Yeah, this comes amidst the intensifying rivalry between the superpowers, the United States and China. Anna, we lean on the United States for defense, but when it comes to trade, Washington hasn't exactly been friendly to us. Where does that leave the Philippines right now?
Oh, well, the Philippines is really now in a what you call strategic dilemma. It needs the United States for its defense and security architecture vis-a-vis China and vis-a-vis the region. But on the other hand, we have to recognize that we need China when you talk about economic development and economic prosperity, because we need the market of China, we need investment from China, we need digital and green economy, and China is leading in these areas when you talk about economics. Now, so given that we are in such a thing as a strategic dilemma, but one thing that we have to remember, and even you can see it, and you can have a lot of example in among ASEAN member states, that the Philippines, it's not necessarily a choice between China and actually the United States. It is more about being strategic, that when you do your development plans, when you pursue strategy economically, security, and political wise vis-a-vis the region and vis-a-vis the world, you have to anchor it in what you call national interests. And what are the national interests of the Philippines? First, you preserve your sovereignty, you preserve your strategic autonomy, you preserve your independence, and what? Economic development and prosperity and peace. These are the national interests of the Philippines. So if our strategy would be anchored on this, we will be guided accordingly. So we don't need to choose, because we need, what I can see is really we need both. We need China for economic, we need the United States to a greater extent, but calibrated when you talk about our security. And on the other hand, we have to diversify partnership with other majors, middle powers in the region, like for example, Australia, Japan, South Korea. That's why we're part of RCEP. So this is supposed to be the strategy, but the problem with the Marcos administration is from the very outset or the very onset, his foreign policy was already leaning towards the United States, and you have a lot of manifestation of that. You have the EDCA sites, which were added, and you have Balikatan or exercises. And I think this is the challenge of the Marcos administration. He needs to recalibrate his foreign policy, that it would reflect that, you know, the Philippines can be a game shaper, that and actually the chairmanship is the pivotal moment for us, that we can be a credible regional actor advancing our national interests through collective diplomacy and reinforcing ASEAN's role as a nucleus of peace and prosperity in the Indo-Pacific region, in Southeast Asia, and pushing for what you call ASEAN centrality, that amidst all the challenges in Southeast Asia, ASEAN is the center and the Philippines can contribute to that. This is very important when we assume ASEAN chairmanship.
Okay, Anna, how can we use this leadership role to leverage, to get new foreign investments within ASEAN as the trade dynamics shift around the world?
Yes, this is a challenging question for the Philippines at the moment, given the so many domestic problems that we have. I really want to emphasize on this, because, you know, when you talk about attracting foreign direct investment, there are, you know, foreign investor would look at the domestic situation of a country, and the Philippines is facing a lot of domestic challenges. You have a level of political instability in the country. We know that. Everyone knows that in the world. You have the demonstration, they have the political, you know, factions and feuds between political families, you know, the Marcos side and the Duterte side. This is to some extent level of political instability. And another very important factor is massive corruption in government. This is not only known in the Philippines, it is known across the region and across the world. So I think this is a challenge for the Marcos Jr. administration, not only for the country, but to project that at ASEAN in next year, assuming ASEAN chairmanship, you will be able to address their specific issues. And this is very important when you talk about foreign direct investment. I'm not even talking about economic factors, like, for example, inflation, very high electricity, cost of living, and all of this, because these are factors that would affect in terms of our attractiveness to foreign investors. So this is important. These are important issues, and these are not joke. I think if we want to focus on our economy,
trust is capital. Anna, just really quickly, we don't have that much time. Can you talk to us about how much credibility the Philippines brings into this chairmanship, given the ongoing governance and corruption challenges? I mean, we want to attract foreign direct investments, but we also need to get our house in order. How much credibility do we have coming into hosting ASEAN in 2026?
We have a little bit of challenging credibility as far as ASEAN is concerned, and of course even beyond ASEAN, because of the so many domestic problems that we're facing. And I think that is the challenge. How you gonna present yourself as the chairman of ASEAN next year, that you will reclaim, you know, your some kind of image, because the image really of the Marcos Jr. administration, politically, diplomatically, and even foreign policy-wise is to a certain extent not so good. That is one thing that I can say. I'm very much in touch with the region and our ASEAN counterparts. So I think this is something that Manila should work on before next year.
Yeah.
So, yeah.
Yeah, we all have a lot to work on to help improve the image of our country. Anna, thank you so much for your time this morning.
Thank you so much, Maiki, and have a good day.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check out how Asian markets are doing this Thursday morning. Right now, I'm seeing a lot of green. The Nikkei 225 is in the green, higher by 1.34%. Hong Kong's Hang Seng Index higher by 0.7%. Shanghai's Composite up by 0.3%, and Singapore's Straits Times Index higher by 0.6%. Here at home, local shares extended their losses yesterday as investors turned cautious ahead of the third quarter GDP report, and they tracked weak global leads too. The PSE Index fell 0.8% or 49 points to close at 58.18, its lowest finish since April. All sectors ended in the red, led by the mining and oil counter, down more than 3%. Value turnover was thin at 4.7 billion pesos, well below the year-to-date average of 5.86 billion pesos. Analysts say investors remain in a wait-and-see mode ahead of Friday's GDP data, with expectations that growth will slow as government spending cools amid corruption probes and typhoon damage weighs on activity. Yesterday's sell-off also mirrored losses across Wall Street, where market leaders warned of possible corrections in the months ahead. Now, looking to tomorrow, all eyes will be on the IPO of Manila Water Services, poised to be the country's largest listing since 2021, or the biggest in about 4 years. The offer could raise up to 45.8 billion pesos, which will be a major test of market appetite amid sluggish sentiment and higher risk aversion. This will be interesting. It's going to be interesting to see how this stock performs under these current market conditions. Now, on the foreign exchange front, the peso opened at 58.72 against the dollar, showing mild strength after recent weakness. Now, taking a look at the main gauge, let's take another look at the figures. The PSE Index is in the green, higher by 0.2% to 58.31. The broader All Shares Index is higher by 0.3% to 35.43. Now, taking a look at the subsectors, all are trading to the upside, except for the services counter, which is down by 0.2%. Total volume traded is at 103 million shares, valued at 827 million pesos. Market breadth is positive, with 64 advancers, 40 decliners, and 60 stocks unchanged. Now, again, as mentioned earlier, we're taking a look at the foreign exchange market. The peso opened at 58.72 against the dollar, showing mild strength again after recent weakness. Now, on the corporate front, a shakeup is brewing in one of the country's largest telcos. PLDT chairman and CEO Manny Pangilinan is looking for a Gen Z or millennial executive to lead smart communications, signaling a major shift toward younger, digital, native leadership. The announcement follows the resignation of COO Nastasio Boy Martirez amid internal complaints about workplace culture. PLDT posted stronger third quarter results driven by growth in its home and enterprise segments, supported by its fintech arm, Maya. The company also launched SmartSafe, the country's first telco-enabled fraud management platform certified by the GSMA. Pangilinan says that the search for younger leadership reflects Smart's effort to stay aligned with digital trends and connect with the next generation of consumers. The move marks a strategic push to modernize the brand and to prove that in the digital economy, relevance is just as critical as revenue. Now, the post-pandemic office glut isn't over yet. Metro Manila's office vacancy rate is expected to stay elevated through 2027 as new supply continues to outpace demand. Real estate consultancy KMC Savills says that the capital's office market will remain under pressure from high vacancies and structural oversupply, a trend that could keep rental growth subdued for the next 3 years. Analysts note that while some firms are returning to on-site work, expansion plans remain cautious, and developers may need to reposition unused space for flex or hybrid setups. In news overseas, U.S. Treasury Secretary Scott Bessent is striking an optimistic tone after a Supreme Court hearing on the legality of former President Donald Trump's sweeping tariffs. Supreme Court justices raised doubts about the legality of Trump's tariff measures, with both conservative and liberal justices questioning whether a 1977 law on national emergencies granted the president such powers or if it encroached on Congress's authority. The case has wide implications for global trade and marks a major test of Trump's executive powers.
How do you think the court case went today at the Supreme Court hearing?
I think it went very well. I think the Solicitor General made a very powerful case for the need for the president to have the IEPA powers, and I believe that the other side, in a way, fell flat on their face. But that'll be up to SCOTUS.
Secretary Bessent, what's the plan B if the Supreme Court ultimately rules against the president's powers?
We're not going to discuss that now.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.